So today we are going to be looking at special order decision. Let me just review what this special order is all about. There are some key points you need to take into consideration as far as special order is concerned. One is the fact that special order is a one-time order. Okay, the special order is a one-time customer order that involve usually large quantity of a company's products, and it's usually available at a lower price relative to the company's final product price. Now, say for example, the company's normal product is being sold for 100 naira in the market. The special order may be at, say, 90 naira. So 90 naira is lower than 100 naira. So that is one of the things you need to know as far as special order is concerned. One, like I said, is that the special order is a one-time order. Two, the price to be quoted for the special order is usually below the company's quoted market price for its products. Then three, the company is currently operating below the installed capacity level. That is, the company has spare capacity to produce the special order. Those are the three key things you need to know as far as acceptance or rejection of a special order is concerned. So let's talk about the concepts. So a special order is a one-time order that may be accepted or rejected depending on whether it is profitable or not profitable. This special order will be completed or will utilize the company's spare capacity such that when a company is operating below the installed capacity level, it is expected that the special order will utilize the spare capacity. Okay, so say for example, a company that has the capacity to produce 100% of a product under normal operation, the company is operating at full capacity, but because of one reason or the other, the company is operating below the installed capacity. Say for example, the company is currently operating at 70%. That means the company has idle capacity of about 30%. So when there's a special order to be undertaken, then it is expected that the extra or the idle capacity will utilize the special order. Okay, so that's basically the introduction to special order decision. Remember what I said, as far as special order is concerned, the company is currently operating below the installed capacity level. Okay, then two, the price to be quoted for the special order is usually below the company's quoted market price for its products. Okay, then another thing that you need to take into consideration is that the company will make use of that spare capacity because it's a one-time order. All right, so that is that. Now, the decision as far as special order is concerned will be examined critically in two perspectives: the economic angle as well as the qualitative factors. Now, what is the economic angle of the decision to be taken? As far as acceptance or rejection of a special order is concerned, the economic angle involves the process of comparing the sales value, that is cash inflow, arising from the special order with its associated relevant cost, whether it will result in additional profits or the company may incur losses as a result of the special order, using incremental analysis. Okay, using incremental analysis. So What I'm trying to say in essence is that as far as economic angle of special order is concerned, the most important thing you need to do is to compare the sales value from the special order with its associated relevant cost, whether it will produce additional profits or loss to the organization. All right, that's what you need to do. Now, one thing you need to understand is that there are two different ways examiner can test you as far as special order is concerned. If in the question you are given sales value or selling price, it means that examiner wants you to determine either profits or loss from the special order. The focus is on the special order. You are less concerned with the company's normal operation. You focus your attention on the special order. So what is the sales value from the special order? Then you compare it with the relevant cost of making the special order, whether it will produce additional profits or it will result to loss to the organization. So you are less concerned with the company's normal operation. That is the economic analysis. Now, what I'm trying to say in essence is that if in the question you are given a sales value or selling price, it means that you need to compare the sales value with the relevant cost. But if the second way is that examiner can just give you cost, there will be nothing like selling price, nothing like sales value. So in this case, you are supposed to determine relevant cost of making the special order. Okay, you need to determine relevant cost of making the special order. So your knowledge of relevant costing principle will be applied in this situation. All right, because examiner may want you to determine the minimum price to quote for the order. Examiner can also want you, okay, to calculate the relevant cost for the special order. All right, so these are the things you need to take into consideration. All right, so that is as per that. Now, sorry, I don't know. Where is this one coming from? Okay, sorry, I have a pop-up, so that distracts my attention. Now, how do you then determine the acceptance or rejection of the special order using the economic analysis? So there is a format that you can apply. There's a format to determine the profit or loss arising from the special order. So this format is only useful if in the question you are given sales value or you are given selling price. That is only when you use this format. So what are you supposed to do? The first thing you are going to do, of course, is to determine the sales value. If in the question you are not given the sales value, you may be given selling price. Therefore, you multiply selling price with the number of units sold. Okay, so that will give you the total sales. Then you now compare it with the relevant cost of executing the special order. The focus, like I said, the focus is on the special order. You are less concerned. You are less concerned with the company's normal operation. Okay, say for example now, here we have happiness. Maybe happiness wedding is next month. All right. Our wedding is in next month. So happiness can approach a Coca-Cola company that, please, I need branded bottled water. Happiness weds Mr. XYZ. All right. So that's a special that happiness is not going back to Coca-Cola next time to say, okay, I want to do this thing again, because marriage is a one-time thing. All right. So once that's a special order, what Coca-Cola will do is to analyze that special order, whether it will be profitable or not to the company by comparing the sales, the price that Coca-Cola will charge happiness versus the cost that Coca-Cola will incur for the purpose of producing that special branded bottled water. All right. So this is what we are saying as far as a special order decision is concerned. So, like I said, only if you are given the sales value or selling price, that's only when you use this format. Other than that, you have to just follow the normal procedure for calculating the relevant cost. So, after the sales, you consider the relevant cost. Under the relevant cost, you have direct material, you have direct labor, you have direct expenses, You may be given variable production overhead. There could be incremental fixed costs. You may be given direct, attributable, or specific fixed costs. Okay, so you put it there. Like I said, you can have a specific or attributable fixed cost. Okay, so it's also relevant. You may be given opportunity costs. All right, you can have opportunity costs that relates to the special order. It is possible that it is the company that will deliver the order to the customer. All right. Then in this case, the company can incur freight or transportation costs. All right. Then any other relevant cost that is associated with the special order, like contribution loss, all of that, you need to include it. Okay. Then you add up all the relevant costs, then you now less from the sales value, all right, to have either profit or loss. Yes, Zoom user, go ahead with your question.
Okay, if I understand you well, sir, you said this special order, we have no
Yep.
business with the company existing products.
Normal operation, yes.
Yes, so what we have in business with is the order that they want to
Execute.
produce. So my question now is, this is just it's someone that will prepare this question and they will just give us figures. Now, I want to talk of reality settings now. You
Yep.
using happiness wedding as an example. So,
Mm-hmm.
that you said we are to charge the cost of producing it to the revenue, to the sales. How are they going to know the value they are going to sell it compared to the sales that will either give them profit or loss? Do you get my question? I don't know how to
I
put it
get
well.
your question.
Okay, sir.
This is what we are saying. The company's product generally, let's say for example, is 500 naira. The selling price of the company's product normally is 500 naira.
Yes, sir.
So it is believed that this special order will be quoted below that 500 naira. It could be 450, it could be 400 for the special order. Now, you are
Okay.
asking how would they determine the price to charge, isn't it?
Yes.
Of course, in this case, the company will need to carry out incremental costs that they are going to incur for the purpose of the special order. You see, eh, just for example now, as far as equity professional is concerned, let's say we're in the period of towards ending of March, right? Towards ending of March, some students are just coming in to join the class. You see, and you know that one paper for our class is 40,000 naira. A student that
Yes.
is coming in March, because we still have in our class is not fully occupied. There are space at the back. We can still
Yes.
accommodate more students. So those students that are coming in, they will be telling you that, oh, they cannot, they can only offer 30,000 naira, for example. So equity professional will need to think, okay, 30,000 naira, but this I'm supposed to charge 40,000 naira. Okay, what are the costs I'm going to incur? Ordinarily, apart from all those costs that are directly related to producing the special order, no additional cost that will be incurred for the purpose of the special order, because the company will be using, the company is idle. The company has idle capacity to do the job.
Okay.
So no significant cost will be incurred. So if you are coming, certainly if the selling price will be more than the cost that I'm going to incur, if the sales value is more than the cost that I'm going to incur, certainly it will be an additional profit to me. Like I was trying to say the other time, those students that want to offer 30,000 instead of 40,000 naira, equity professional we need to analyze it. Okay, what are the costs I'm going to incur? It's the same lecturer that will be taking the existing student that will take the new student that are just coming in March. It's
Yes.
the same marker I will use for them, that I will use for the existing student is what I will use for the new student. What are the additional costs? I've already purchased the furniture, the desk that I'm going to use. So that is not part of the
Exactly.
cost. So the only cost that I think I will incur is the cost of material. Do you get? Because cost of material will vary depending on the number of students available. So that means I will need to print more additional material for the student to use. So any additional cost that I will incur for the purpose of the special order is what I will consider. All right?
Yes, sir.
Okay. So now at this point, after your calculation, after your incremental analysis, you need to make a decision as to whether the special order should be accepted or rejected. Now, if your calculation results to, if your calculation is positive, then your decision should be that the special order should be accepted. If this incremental analysis will result to loss to the company, if the special order will result to loss to the company, then the special order should be rejected. So that is the decision rule as far as a special order decision is concerned. So I will repeat, if it is profits, if your calculation is profits, then the special order should be accepted. But if it's a loss, it should be rejected. Somebody can ask, what if it is zero? That is, the sales revenue and the relevant cost of making the special order are equal. Then in this case, the company can either accept or reject the special order depending on other qualitative factors. So what are the qualitative factors to be considered in relation to special order? One qualitative factor to be considered is to provide answer to some germane, to some vital questions, okay? One of the questions is that, is it certain that fixed cost will remain constant within the relevant range? Because fixed cost has already been incurred by the company. The fixed cost has already been incurred by the company, and that's why we are not charging the special order. What we are now saying is that, is it certain that fixed cost will remain constant? That is, the fixed cost will not change during the period under consideration. If the fixed cost will change, then the additional fixed cost to be incurred will be part of the special order. That's number one factor. The second factor is that, do we have sufficient spare capacity to undertake the job? All right. Do we have the required spare capacity to undertake the job? Because we don't want anything that will disrupt the normal operation of the company. Okay, we don't want anything that would disrupt the normal operation. So you need to consider whether there is sufficient spare capacity to undertake the job. For example, your spare capacity may be 10%. Meanwhile, the special order may require maybe 12% or 15%. That means there is no enough. So you must ensure that there is adequate spare capacity to undertake the job. Then number three factor to be considered is that, is the special order the most profitable way of utilizing the spare capacity? Okay, is the special order the most profitable way of utilizing the spare capacity? All right, that's number three. Then number four is that, will lowering the selling price attract other customers for the company's products? Okay, will lowering the selling price attract other customers to quote for the company's products? All right, these are some of the factors you need to take into consideration as far as the special order is concerned. Now, like I mentioned to you, if in the question you are not given selling price or sales value, it may well be that examiner wants you to determine the minimum price to quote for the special order. That is, just calculate relevant cost for the special order. Yes, that is as per the qualitative factor. So the next thing we want to do now is to have illustrations. Like I mentioned to you, as far as special order is concerned, there are two ways examiner can test you. If in the question you are given selling price or sales value, so it means that you have to determine profits, okay? You have to determine profits or loss associated with the special order. It is also possible that examiner can just give to you scenario and you have to determine minimum price to quote for the order. When that happens, examiner just wants you to determine relevant cost for the special order. Okay, so those are the two ways examiner can test you as far as special order decision is concerned. So at this point, let's have illustrations to demonstrate our points. Okay, let me see. You are going to do illustration number 1 for me. You are going to do illustration number, no, I want to give you, now it's only two questions that we are going to solve. Let me see. I will give you, I want to give you an assignment so that I don't forget. Okay. In any case, I will share the assignment. I will share the assignment with you. I will share the assignment that you are going to solve. I will share with you. But first thing first, let's solve this illustration number 1. Let's start with illustration number 1. Yes, I need one of you to read. One of you should please read.
Cocom Below Limited received.
Okay, thank you.
Cocom Below Limited received a special order to supply 2,000 units to Lagbaja. The order will utilize the available ideal the order will utilize the available ideal facility that was purchased 6 years ago. At the time of receiving the order, the net book value of the ideal facility is 2 million naira, while the market value is 1.2. If the machine is utilized for executing the order, its market value will drop to 1 million. The order will take 2 months to complete. The order will require material ABC bought for 150,000 4 years ago. It is identified that material ABC can also be put into an alternative use at a cost of 60,000 naira, while the current market value is nil. The order will require 4 casual workers at a monthly remuneration of 8,000 naira each, and the service of a supervisor that currently earns 40,000 naira per month. The supervisor is to utilize 60% of its normal time in working to execute the order. Management ascertained that the business will suffer a monthly contribution of 80,000 naira if the supervisor is to transfer 60% of this working time in executing the new order. The supervisor is equally to be paid a monthly bonus of 10,000 naira because of the additional effort needed to achieve on-time delivery. At present, monthly maintenance cost is 25,000 naira, while that of administration is 20,000 naira. If the order is accepted, the two costs will increase to 35,000 naira and 20,000 naira respectively. You are required to determine the minimum price to accept for the order and state the basis you adopt for your computation.
Thank you very much, Christy. Yes, from the requirements, you will see in the requirement A, examiner wants you to determine the minimum price to accept for the order. So when you look at the question all throughout, when Christiana was reading it, there was nowhere selling price or sales value is mentioned. So which means that you want to determine relevant cost for this order. And that's why the examiner is asking you to determine the minimum price to quote. So how do you solve this question quickly without wasting time? So this is another opportunity for you to reflect on what we did under relevant costing for decision making. All right, quickly, let's go through the question together. I will stop sharing this and move to the working note. So at your own hand, you can open the material so that you follow through.
Yes, sir. Hello, sir.
You speaking.
Yes, Omotayo. Yes, sir. We can. The material is online. We don't have the printout. But let's, as you are solving, sir, as you said, we can be checking from our material. most of us are using phone,
Yes.
so we can't be doing phone and this you are working on this thing at the
Oh,
same
okay.
time. One has to go. So, but
No
anyhow,
problem.
you can just carry us along. At least we
You
are.
can minimize.
If
You
I
are losing
minimize, it will
laptop,
I'm
be
there
Abi.
some phone,
it
sha.
it will
No,
not be
no, no.
No, I'm
Even
legible.
using
with
my
your
phone.
phone,
Hello, class.
you can share
I'm
your screen
minimized with
as
my
well.
phone.
That's not allowed. When you want to talk, you raise your hand. You can't just be talking randomly to disrupt my class. All right, please. The issue is that I can't share double. If I can't double, I can't share double screen. It will make the screen illegible. Well, by the time you are listening to the video, it will be very tiny. You can't see it clearly. Even the one I'm sharing, I have to zoom like 140% so that it can be legible. All right. So if you don't have access to the material, just open to you are listening, you can hear me. All right. Open to your material. And if you have two phones, you can access the material and use one to be listening to the class. So, all right, let's move on. The name of this company is Conco below. This is so illustration number 1. This is page. What page is that one? So
37.
that's page 47. On your own, you'll be able to, the question that we are solving.
It's
47
37.
rather.
Oh.
37, okay. 37. All right then. So the name of the company is Conco below Limited. Requirement number A. Examiner wants you to determine minimum price to quote for the special order. Therefore, I would then say minimum price. There's no need for you to say minimum price to quote. So just say minimum price and move on. Okay. Of course, normally you create two Naira signs. Then remember, this question does not involve sales value or selling price. So that's why examiner is asking you to calculate minimum price. Therefore, I will go back to the question scenario by scenario. Remember, relevant costing question are solved through additional information or the scenario as printed in the question. So let's start from the first paragraph as given to us in the question. You are told that Conco Bilio Limited received a special order to supply 2,000 units to Lagbaja. The order will utilize the available idle facility that was purchased 6 years ago. The activity level for this special order is 2,000 units. Okay. However, we are told that the order will require the available hydro facility that was purchased 6 years ago. At the time of receiving the order, the net book value of the hydro facility is 2 million naira. All of you must participate in this question. However, when you want to talk, when you want to respond to my question, you need to raise your hand. Don't talk randomly. Just raise your hand, then I will call you to talk. Now, this idle facility, we are told that it was purchased 6 years ago, and the current book value is 2 million naira. So I want to ask you, based on your past experience on relevant costing, this 2 million naira, is it relevant or irrelevant? If you know it, just raise your hand. Yes, the 2 million naira, is it relevant or irrelevant? Yes, Zoom user, Christine, talk, go ahead.
Irrelevant.
Pardon?
Irrelevant.
Why is it not relevant?
Because it has even been said that when we received the order, like the market value of that machine is now 1.2.
I
So we
mean
are
the
going to
2
work.
million naira, the 2 million naira, is it relevant or irrelevant? The 2 million.
It's
The book
irrelevant
value,
now. Is historical cost.
that's what I want to hear. That 2 million naira is irrelevant because it's an historical cost. Okay, because it is not sufficient for you to just calculate your minimum price. You also need to state your assumption, and that's what the examiner is asking you in the B part of the question, to state the basis you adopted for your computation. So you need to show it. All right. Yes, you raise hand again, Christy. Christiana. Okay. Now, so the 2 million naira is irrelevant. So we are now told that the market value of this idle facility is currently worth 1.2 million naira. If the machine is utilized for executing the order, the market value will drop to 1 million naira. That 1.2 million naira, the market value of the idle facility, is it relevant or irrelevant? Yes. Who will help us? Yes, Sakinat, talk to me.
Not everything is relevant. I think the difference between the 1.2 and the 1 million naira is what's relevant. That's the 200,000.
Okay. All right. So the 1.2 million minus 1 million. So the 200,000 is relevant. The 1.2 million and the 1 million naira is irrelevant. So you are correct. Now, the issue is that even if examiner did not give you the 1 million naira for the second one, if you are just told that why the market value is 1.2 million, no further information. So because the examiner did not tell you that the idle facility will be disposed of, then even the 1.2 million naira market value is irrelevant. Just ignore it. You can only consider market value or disposal value if you are told that it will be disposed of. Provided it's not going to be disposed of, then you don't need to consider it. But as far as this particular question is concerned, we are told that the current market value of that idle facility is 1.2 million naira. If the machine is now used, if the facility is now used to execute this order, the market value will drop by 1 million. It means that this special order has utilized 200,000 naira from the value from the value of the machine. All right. Therefore, only the 200,000 will be considered as cost. So I would then come here. So I would then say idle facility equal to 1.2 million. The market value is 1.2 minus 1 million. So we have used 200,000. Okay. This special order has utilized 200,000 from the idle facility. All right. So let's move to the next one. Yes. The second paragraph. The order will require material A, B, C bought for 150,000 naira 4 years ago. Material A, B, C bought for 150,000 naira 4 years ago. That 150,000 naira, relevant or irrelevant? If you know it, raise your hand. Happiness. Yes.
It's irrelevant
Why?
because it's an historical cost.
It's because it's a sunk cost. Because it's a sunk cost. That's it. All right then. So the 150,000 naira is irrelevant because it's a sunk cost. Sunk cost is a past cost. They are costs that have already been incurred because relevant costs must relate to the future. Any costs that have been incurred in the past are irrelevant and should be ignored. And that's why we are not going to consider this 150 as part of the cost of the special order because it's a sunk cost. Okay. It is identified that material ABC can also be put into an alternative use at a cost of 60,000 naira, while the current market value is nil. That 60,000 naira is relevant because it's an alternative use. So let's move on there. Material ABC. So I would then say material ABC, 60,000. Next item. Third paragraph. The order will require 4 casual workers at a monthly remuneration of 8,000 naira each. That 8,000 naira, is it relevant or irrelevant? If you know it, raise your hand. Yes. Sakina, talk to me.
Is relevant.
Why?
Because they are not presently engaged in the company. They say to require 4 casual workers at a monthly remuneration because they'll be paying them the monthly remuneration as a result of this Concord Below project, a special order.
Okay. Yes. Thank you, Sakina. Then Christy is raising hand. Talk to me.
It's relevant
Why?
because whether or not they execute it, they get paid.
Pardon?
Whether or not they execute the special order,
Uh-huh.
oh no, it is irrelevant.
Okay. The casual
Irrelevant.
worker monthly remuneration is irrelevant, right?
Yes, yes.
So what you are saying now is that whether or not the special
They
order
execute
is
the special
undertaken or
order.
not, they are going to pay them, isn't it?
Yes, yes.
Okay. So I need one more person.
Same.
Happiness, Crystal has spoken. I think Happiness just spoke now. Then I need one more person. Pelumi, yes, talk to me.
Okay, for
They,
me, right? I mean, if we are working with the first paragraph, it says that the order will require 4 casual workers at a monthly remuneration of 8,000 naira each. So I think it's actually relevant cost because the person has made us understand that the order will take 2 months to complete. So, and it also requires for, I mean, it is the order now that is requiring the 4 casual workers for a monthly remuneration of 8,000 naira. So I think that the casual workers cost is a relevant cost.
did you say irrelevant or irrelevant?
Irrelevant. It is relevant.
Okay. Okay.
That's
All
what
right
I
then.
think.
All right then. So because of time, yes, the casual workers, they are those workers that will be directly involved in production of the special order. All right. So this 8,000 naira is relevant and you have to consider it. From the name itself, casual. These are not regular employees of the company. All right. So it is those regular employees of the company that are on a monthly basis that the company that you can say it is not relevant because whether you execute the job or not, you have to pay their salary, isn't it? But these people, this casual worker, they are not on the salary. All right. It is remuneration to pay for their efforts. All right. So they are casual. So the 8,000 naira is relevant. Let's consider it. So I will then call me a labor. 8,000 naira. Please, you have to be very careful. When you want to answer this, you have to be very careful. Examiner has told us that there are 4 casual workers. They are on a monthly salary remuneration of 8,000 naira. So 8,000 naira multiplied by 4 workers, they multiply by 2 months. You know, the period of this contract is for 2 months. Okay. So 32 multiplied by 2, that's 64,000. I believe that is clear. Move on to the next one. Still on the same paragraph. And the service of a supervisor that currently earns 40,000 naira per month. Supervisors cost of 40,000 naira. Is it relevant or irrelevant? If you know it, raise your hand. Let's learn together. Yes, Sekinat.
40,000 is irrelevant
Why is it not relevant?
because the supervisor currently earns the amount, so regardless of whether it's taking on the project or not.
Yes, that is the answer. The 40,000 naira of supervisor's salary is irrelevant. Whether you execute the special order or not, you must pay supervisor's salary. Therefore, you ignore it. It is not part of the calculation. Move on from the same paragraph. The supervisor is to utilize 60% of his normal time in working to execute the order. That 60% has no material effect on whatever we are doing right now. Management ascertained that the business will suffer a monthly contribution of 80,000 naira if the supervisor is to transfer 60% of his working time in executing the new order. So that 80,000 naira, is it relevant or irrelevant? Yes, Pelumi.
So it is a relevant cost because it's more like a will I say maybe a contribution foregone or like a profit foregone. I'd be like a contribution lost or a profit loss to the organization. So it is a relevant cost to that order.
Did you say irrelevant or relevant?
A relevant cost. It is relevant because it is like
that's what I want.
it is like a loss because of that particular order. So the order has to incur the cost of that loss.
Yes, you are correct. So you are told that the management ascertained that the business will suffer a monthly contribution of 80,000 naira if the supervisor is to transfer 60% of his working time in executing the new order. That's a contribution loss. So I would then come here, contribution loss of 80,000 naira for the period of the contract, which is 2 months. You have to be very careful. Wherever they mention per month, you need to indicate it because the activity level is for 2 months. So here will be 160,000. Moving to the next one. Still on the same paragraph. The supervisor is equally to be paid a monthly bonus of 10,000 naira because of the additional effort needed to achieve on-time delivery. Bonus of 10,000 naira, relevant or irrelevant? Yes, who will help us? Bonus of 10,000 naira, relevant, Sekinat.
Relevant.
Relevant, right?
Yes.
Why?
Because it's a payment that is incurred because of the additional effort needed.
That's what I want to hear. So you are correct. You are correct. Okay, you can put down your hand. You are correct. Okay. So the bonus of 10,000 naira per month is relevant. So I will come here, bonus. Additional effort is needed to achieve on-time delivery of the special order. So you need to compensate the supervisor for additional effort multiplied by 2 months. That's 20,000 naira. Next item. Let's move to the next paragraph. Somebody send the charts. What is that? 37, 1107. What is 37? Oh, okay. Somebody is asking for page. Okay. Sandra, you raise hand. Talk to me.
Okay, so for that contribution loss, the question said 60%, so we contributed 60%. I thought for the 80, we're only going to take 60% of that 80,000. Or are we taking the full 80,000?
No, you are not taking 60% of 80,000. If you check from the second sentence of that particular paragraph, we are told that the supervisor is to utilize 60% of his normal time in working to execute the order. So what that simply means is that currently the supervisor is working somewhere, and as a result of this special order, the company will be able to work only for 40% in its normal operation. So he will come and spend 60% on this special order. So you are not taxing, you are not charging for the purpose of 60% of his time. Whether supervisor use 40%, 60% of his normal time, you are still going to pay him his normal salary. But what the question is now saying is that Management ascertained that the business will suffer a monthly contribution of 80,000 if you move the supervisor, if you take 60% of the supervisor's time from this normal operation, the company will suffer a contribution of 80,000. Why is it? If not because of the 60% of his time, that 80,000 will not be incurred. So you are not taking 60% of 80,000. That's not what the examiner says. All right, it's the entire 80,000 naira per month that you are going to consider. Okay. Yes. The fourth paragraph. At present, monthly maintenance cost is 25,000 naira, while that of administration is 20,000 naira. If the order is accepted, the cost will increase to 35,000 and 28,000 naira respectively. So how do we solve that question? How do we solve it? That scenario, how do we interpret it? Or how do we treat it? Yes, Sakinat.
I mean, it's more of a question. So the monthly maintenance, is it maintenance for the machine or maintenance for the space, like for the maybe the facility?
We are not told whether it's maintenance for the company, for the company's machine or for the special order. We are just told that at present, monthly maintenance cost is 25,000, while that of administration is 20. Okay? Yeah.
Okay. So that's
So we don't know which of them it is.
Okay.
Yes.
So
Christy, go ahead. You raise hand.
Okay, sir. I think regarding this monthly maintenance, we are going to be using the increased amount. That's what we are going to charge to this cost. So for the first one, it increased to 35,000 naira. Then I think it's just 10,000 naira will be incurring, and the other one that is 20,000 naira, it is 8,000 naira will be incurred. That is 28 minus the normal one minus the 20,000. So that's 8,000. Did you get me, sir? Hello? Is anyone hearing me?
yes, we can hear you. I think his internet tripped off.
Okay.
Christy, continue the teaching.
I said, I think we are going to be incurring the amount that the maintenance cost increased with. The first maintenance cost, they said is 25,000 naira. And they said if the order is accepted, the cost will increase to 35,000. Okay, the administration cost, Abi. Okay, the monthly cost, the monthly maintenance cost and administrative cost. Okay, so I think the monthly cost now, the amount we are going to be charging is 10,000 naira. And for the administration, we are going to be charging 8,000 naira.
Yes, we get that part too. I say continue now. You are our second lecturer.
Continue, bye-bye, sir.
Yes, Pelumi, you are raising your hand. Can we hear from you?
Oh, I was going to say the same thing as what Christy said. Let me just blow my hand. I didn't know it was still raised.
Elumi, continue the teaching now, or you cannot continue.
Mota, you can continue.
Okay, let's wait.
Wait, was that what I was talking?
Yes, ma.
I thought it's Ogal.
Okay, since we are waiting for Mr. Dejuan, can you just continue explaining like that? At least over and over again.
Is that Sunday?
Yes, ma.
No, I will not say anything. I even thought it
Sorry,
was Mr.
hello, sorry,
Adediran.
I've been talking since. I've been talking since, not knowing that my system was. So
Hey,
I've been talking since, not knowing that my speaker was off.
muted.
See, I was even talking about Tayo, that Tayo will bounce on you because why are you talking without raising hand? Not knowing that I'm not passing any message. It's okay. So Samuel, you are raising hand. What are you saying? Okay.
So
All right, that's it.
she's right. So I think we are just going to multiply it by 2 since it's 2 months.
It's okay. No problem. Yeah, mute again. So you can see that, when we had relevant costing, I mentioned to you that there are 3 attributes of relevant cost. 1 is future, 2 is incremental, 3 is cash flow. So the incremental costs are costs that change between alternatives as a result of the decision taking. Okay. Now, as you can see, this maintenance cost of 25,000 naira is irrelevant. The administrative cost of 20,000 naira is also irrelevant. But you are now told further that as a result of this special order, the 2 costs will increase. If the order is accepted, the 2 costs will increase to 35,000, from 25 to 35,000. That means the order we utilize, we incur additional 10,000 naira for maintenance. From 20,000 naira to 28,000, the order will also incur additional administration cost of 8,000 naira. Therefore, since we are doing monthly, the order will take 2 months. So I will then come here, I will say incremental cost. The first one is maintenance. Okay. Maintenance, the original maintenance cost is 25,000. So it has increased to 35. Okay, minus 25. The period of the contract is 2 months, multiplied by 2 months. Okay. So 10,000 multiplied by 2 will give us 20,000. You do the same thing for administration. Administration has increased to 28,000 from the original amount of 20,000, multiplied by 2 months for the period of the contract. That's 16,000. So that's all. We have interpreted the scenario. Add up everything together. What you get? What you get? That's the minimum price. What you get? Add up. Are we together? Adesua, are you in this class?
540.
500 and what?
40,000.
540,000. That's the minimum price. I would then say, examiner is asking you in the requirements that you should determine the minimum price to accept for the order. The minimum price that Kunko below should accept for the special order is 540,000. Okay, that answers number A requirement. Number B, you have to state all relevant assumptions. Examiner is asking you to state the basis of your calculation. So you need to state your assumptions. I would then say the calculation in A above is based on the following underlying assumptions. Okay, remember what I told you. When you want to state your assumption, it's not something you are going to fabricate. It's already in your question. But how you come about your numbers from the first paragraph, what did you do? Second paragraph, what did you do? That's all you are going to do for all of them. So number one, in the first paragraph, we are given hydro facility. All right, in the first paragraph, you are given hydro facility of 2 million naira. And we said that 2 million naira is irrelevant because it's an historical cost. So you need to state your assumption. So I would then say hydro facility. The net book value of the hydro facility of 2 million naira is irrelevant. Why is it not relevant? You can't just say it's irrelevant. You need to tell us why it is not relevant. It is irrelevant because it's an historical, let me write that, historical cost. That's it. We are done with that. Number two, let's go back to the question. Still on the same paragraph. We also given market value of 1.2 and then 1 million naira. So what do you do? Then you can then say, okay, we're still on that number one, idle facility. So let's continue with that. The only relevant cost, I will then continue, the only relevant cash flow associated with the idle facility is the loss in value of 200,000 naira, representing the difference between the current market value of 1.2 million and 1 million naira. So we are done with that. You see the way we are doing it? That's what is expected of you. Let's move on to the next one. Paragraph 2. In the paragraph 2, we are given material ABC bought 4 years ago at 150,000 naira. So we said that is not relevant. So number 2, material ABC. So the cost of material ABC of 150,000 naira bought 4 years ago is a sunk cost. It's a sunk cost, and therefore not relevant to the calculation. So no need to talk too much of story. That's it. That's what we did in that one. If you like, you can comment on the alternative use. If you like, you can just ignore it. However, you can say, however, the cost of the alternative use of 60,000 naira is relevant and has been included in the calculation. So that's that. The third paragraph, we said that in the third paragraph, the casual worker's salary of 8,000 or remuneration of 8,000 naira per month is relevant. So we have accounted for that. So let's talk about casual workers. Number 3, casual workers. The remuneration of the casual workers of 8,000 naira per month. Since they will be directly involved in executing the order. Okay. Then supervisor. Number 4, supervisor. The monthly salaries of the supervisor of 40,000 naira is irrelevant. Is irrelevant because the supervisor will be paid irrespective of the decision taken on the special order. So that's why we did not consider that 40,000 naira. Okay, so that is for that. What else? Still on the same paragraph, we also have contribution loss. Number 5, contribution loss. A contribution loss of 80,000 naira per month has been included in the contracts, has been included in the calculation. Has been included in the calculation. A contribution loss of 80,000 naira per month will be incurred. As a result of the supervisor transferring 60% of his working time to execute the order. This has been included in the contract. Or let me just continue with what I'm doing. A contribution level of 8,000 per month has been included in the contract since the supervisor, is expected to transfer 60% of his working time to execute the order. Okay, that's it. Next one, still on the same paragraph. You're also given a bonus. You are told that there's a bonus of 10,000 naira. Okay, if you like, you can match the two together. You can match the contribution and the bonus together, or you do it separately. Number 6, bonus. A bonus of 10,000 naira has been included in the calculation in order to achieve on-time delivery. In order to achieve on-time delivery of the special order. Okay, then number last, we also have incremental cost. Number 7, incremental cost. So you say the maintenance cost, the maintenance and administration costs of 25,000 and 20,000 naira respectively are irrelevant to the calculation. Only the incremental, only the incremental cost of 10,000 naira, that is 35,000 minus 25,000 and 8,000 naira, that is 28,000 minus 20,000 are included. Okay, so that's it. That's the end of the question. It's only when you do this that you're going to earn your entire 15 marks. Other than that, okay, you may not be able to earn the full mark. And like I usually tell you, in most cases, the assumptions carries more mark than the assumption carry more mark than the calculation that you have done. So don't shy away with your assumption at all time. All right. So that is that. Let's have one more illustration before we move on. All right. Let me know if you have any question before we move to the next one. Any questions so far?
Sir, please, can you go to number 4 for the supervisor?
You are supposed to raise your hand, Sam.
My bad. Sorry, sir.
Okay. Now you have it. Okay, are you done? Sam.
I'm almost done, sir.
After this, let's have one more illustration. Are you done, Sam?
Yes, sir.
Okay. So let me stop sharing this. Then let's have one more illustration. So like I said, I will share the assignment you are going to do. Yes, Ogechi, talk to me.
Good morning, sir.
Good morning. How are you?
Fine, sir. I just wanted to clarify that first item, idle facility, where
Yes.
we have 1.2 minus 1 million,
Yep.
is the idle facility. You know, they also mentioned that the idle facility was executed for 2 months. Are we not supposed to times it by the number of months, or is it just a direct, or is it that the 200,000 was straight for the 2 months?
Now the 200,000 is not based on activity level. The market value of the idle facility is not based on the period of the contracts. All right.
Okay.
So you are told that the market value is 1.2 million, right? If the machine is utilized for executing the order, its market value will drop to 1 million naira.
Yes.
The order will take 2 months to complete. So examiner did not tell you that its market value will drop to 1 million naira. So that's what examiner, you are not told that it's not based on the activity level. It's not based on the period of the contract. Okay? Yeah.
Okay, sir. Thank you.
You're welcome. You can put down your hand. All right. So let's have one more illustration on this. Remember what I said? I will still give you my assignments. So let's solve this illustration number. I'm looking for the one that has to do with profits. Let me save this one as a sales value. Okay. Let's solve this illustration number 3. Let's solve illustration number 3. I need somebody to read for us, please.
School Debtor Limited
Thank you.
is a pharmaceutical company operating from Enugu, Nigeria. Recently, the company received an order from Eyimba Football Club to produce a technological device for the treatment of groin injury. The contract is expected to be completed in 1 year's time at a contract price of 3 million naira. Currently, the company has spent 400,000 naira on research and development and an additional cost of 250,000 naira on market survey to promote the device for other football clubs in Nigeria. The following information relates to the contract. Materials. The materials will require zinco. This material was bought 2 years ago at the cost of 600,000 naira. The material is toxic, and if not used for the contract, will be disposed at a cost of 50,000 naira. Labor. Skilled labor is hard to recruit in the labor market. In the recent management meeting, the sales manager suggested that 2 workers from the production department on a current wage of 400,000 be transferred to execute the order. The production manager does not buy the idea because he believes that transferring 2 of the existing staff to execute the contract will lower productivity. The management resolved that the staff should be transferred since the company is finding it difficult to recruit additional staff. However, if this happened, management believes that the sales will drop by 1.5 million naira at a marginal cost of 1 million naira. Production overheads. The fixed production overhead absorbs relates to labor and will amount to 200,000. Research and development staff. It has been concluded that when the work on this contract is completed, the research and development department will be shut down. The R&D staff costs for the year include wages of 600,000 and redundancy and severance pay of 150,000 now or 350,000 in 1 year's time. Equipment. The contract utilizes a special equipment which cost 180,000 3 years ago. It has a residual value of 30,000 naira in another 2 years and a current disposal value of 80,000 naira. If the equipment is used in the contract, it is estimated that the disposal value in a year's time will be 60,000 naira. Share of general building service. The contract is charged with 350,000 per annum to cover general building expenses. The building space is currently being used for the contract. However, a neighboring business has approached Kudeto Limited to lease the space for 1 year at a consideration of 70,000 naira. Required. Advise the CEO of Kudeto Limited if the contract should be accepted. State any assumption made in the calculation. Note, ignore the time value of money. Thank you.
Thank you very much, Pelumi. So that is the question. Examiner wants you to advise the CEO of Scudetto Limited if the contract should be accepted. State any assumption made in your calculation. All right. So this is the time for you to consider the principle of relevant costing. And you notice that when Pelumi was reading it, I underlined the contract price. So there's a contract price of 3 million naira. This contract price will serve as a cash inflow. All right. So again, I also noticed that when she was reading, we have savings. All right. We have savings. So what that means is that we are going to have profit or loss from this special order. Okay. So let me stop sharing this and move to the working notes. Let's see how we are going to treat it at the end of the day. Then thereafter, of course, the first thing is for us to determine profit or loss in order to advise whether the contract should be accepted or not. Then the second part of the question is for us to state all relevant assumptions that we have made in our calculations. So let's take it one after the other. All right. Okay. Let me reshare. Samuel, I've been telling you since to mute yourself. Good. Thank you. So let's go back. The name, this is solution to illustration number 3. That's on page what? What page is that?
38.
38. Page 38. Oh, okay. I'm opening a different file. Page 38. Okay. The name of the company is Scudetto. All right. Is it a Scudetto Limited or PLC?
Limited, sir.
Okay. So of course, examiner is asking us to advise whether the contract should be accepted. So I would then say calculating or acceptance or rejection of a special order. Okay. So let's go back to the question and be picking the variables one after the other. We create 2 naira signs, debit and credits. So let's go back to the question, paragraph by paragraph. Scudetto Limited is a pharmaceutical company operating from Enugu, Nigeria. Recently, the company received an order from Enyimba Football Club to produce a technological device for the treatment of groin injury. The contract is expected to be completed in 1 year's time at a contract price of 3 million naira. So that 3 million naira is a cash inflow. So let's put it down. Contract price, 3 million. Move on to the next one. Second paragraph. Currently, the company has spent 400,000 naira on research and development and an additional cost of 250,000 naira on market survey to promote the device to other football clubs in Nigeria. So 400,000 and then 250,000 naira. Are they relevant or irrelevant? Let's participate. Pelumi, yes.
So they are irrelevant because they are past costs that has been incurred already. So they are not relevant to this contract.
They are sunk cost. You are
Okay,
correct.
sunk cost. Yes.
They are sunk cost. So the 400,000 and the 250,000 are not relevant because they are sunk cost. You can see here, examiner mentioned to you, the company has spent, and you know that examples of sunk costs are development costs or research and development costs, market survey. Remember when I was giving you the notes, all right? So these are sunk costs and should not be considered. Yes, Pelumi, you still raise hand?
Oh, sorry, sir. I forgot to lower it. I'll lower it now.
Okay, then. Yes, that even reminds me. Wumi, are you in this class? Let me check. I don't know, maybe I'm using another name. Wumi?
Yes, I'm in
Wumi.
this class, sir.
Wumi. Okay. Oh, Tayo, Wumi. Okay. All right then. So let's move on. So you have to state your assumption. Okay. You have to state your assumption for those ones that we have ignored. The material. The contract will require material zinco. This material was bought 2 years ago at a cost of 600,000 naira. So that 600,000 naira, is it relevant or irrelevant? Yes. 600,000 naira. Yes, Christy.
Irrelevant.
Why?
It is a sunk cost.
It's a sunk cost because it was bought 2 years ago. So that 600,000 naira is a sunk cost and therefore irrelevant. The material is toxic and if not used for the contract, it must be disposed of at a cost of 50,000 naira. That 50,000 naira, relevant or irrelevant?
Relevant.
Who is talking? Yes, who is talking? Palumi, yeah, talk.
So it is a relevant cost because it's a savings to the organization. Thanks to the contract, it will be saving the organization 50,000 naira because material is toxic and is not needed. So it is a savings to the organization.
Okay. All right, you are correct. So you are told that the material, that was bought 2 years ago at 600,000 naira, the material is toxic, and if not used for the contract, it must be disposed of at a cost of 50,000 naira. When I was explaining the concept to you, I said that whenever you are told in the question that the material is in current use, is no longer needed and will be disposed of. So provided it can be, you are told that it will be disposed of, that disposal value will represent a saving to the organization. It is not a cost. Examiner purposely puts toxic so that students will think that, and you are also told that it will be disposed at a cost. It is not a cost, rather it's a saving to the organization. All right, irrespective of the grammar that is used, whether it's a cost, whether it is toxic, whether it is hazardous, whatever it is, provided you are told that the material will be disposed of, you are the one that will interpret it as a saving because disposal value will represent a saving to an organization. So, yes, Belu, you raise hand.
Yes, sir. So I just want to ask on this disposal thing.
Yeah.
What if the question says maybe it's going to be disposed at a price of, does that one also mean a savings, or are they trying to say that okay, if they say can be disposed at the price of, does it mean that okay, if they do it for this contract, they can sell it for this price, or does it still mean that it's still a savings as long as there's disposal in it?
Once there is a disposal, once you are told that the material will be disposed of, whether it's at a cost or at a price, whatever it is, is a saving to the organization. Disposal value represents a saving to an organization. It's a concept.
Oh,
Okay?
okay, sir. Yes,
Yeah.
sir. Thank you. Thank you so much.
So this is 50,000. It will be on the credit side. Okay. So let's move on. You have to state all relevant assumptions. Labor. Skilled labor is hard to recruit in the labor markets. In the recent management meeting, the sales manager suggested that 2 workers from production department on a current wage of 400,000 naira can be transferred to execute the order. Okay, that 400,000 naira, is it relevant or irrelevant? Yes, Samuel, you raised hand.
Sorry, sir, it's not that's the question you asked. So the disposal value, are
Please,
we
is breaking. I can't hear you clearly. Yes? Talk to me, Sam.
Okay, sir. The disposal value, are we
Yes, sir.
adding it to the cost or we are removing it from the cost?
So you can see that I created 2 naira signs. Okay? You can see I
Hello,
created 2
sir.
naira. I've heard you, Sam. You can see that I created 2
Hello,
naira
sir.
sign. Sam, can you hear me?
Yes, sir,
Yes,
we
sir, we
can
can
hear
hear
you.
Yes,
you.
we
I
can
think
hear you.
Samuel's network is a bit, maybe he
It's,
has bad network.
it's okay. Thank you. Yes, Zoom user. Christy, what's your question? You raised hand.
I'm not asking question. Now your question I want answer.
Oh, okay. Go ahead with the question. Yes, with the answer.
It's not relevant
Why is it not relevant?
because they said they are moving 2 staff from the production department of the company for
Okay.
regarding the order. Whether or not they execute it, then they still collect their salary.
This is not salary. This is wage. There are difference between wages and salaries.
On the current wage,
Then
they
So
still
this
collect
is
their wages.
okay. So the 400,000 naira is irrelevant. Okay. So who wants to try again? That 400,000 naira, is it relevant or irrelevant? Yes. Sakina, hello, Cassandra, yes, talk to me.
Okay, so I think it's really relevant now because with what I understand
Irrelevant.
about
Why?
relevant because since they'll move them from I mean I can't be the question now. Wages they pay wages based on what you do, unlike salary that whether you work or you don't work, it's a monthly stuff. But wages is based on you know based on your work activities now. So since they'll be moving them from what they are doing now to the special order, I think it's relevant.
Okay, what you are saying is that the 400,000 naira is relevant, right?
Yes, sir.
Okay, so somebody raised hand again. I think that's okay, nobody. All right. So because of time, okay. Samuel, yes.
Sorry, I'm back, sir. So the question I was asking is this disposal value, is it
Yes.
adding to the cost or we are subtracting it from the cost of
We
this
are not
special
adding
order?
it to the cost. You can see that this disposal value is on the same line
Okay.
with the contract price. That's an income. That's
Okay.
a cash inflow. So on the
Okay.
debit side, the second naira sign will be for the cost.
Okay, sir.
So at
Thank
the
you,
end
sir.
of the day, you sum up all the cash inflow. You also sum up all the cash outflow. Then you find the difference.
Okay,
Okay.
sir. Yes, sir. And the 400,000 is irrelevant
Why?
because they are these workers.
Yeah.
However, since although we are paying them wages, but I feel they are still part of the company and they are being moved from one production organization to another, to this one they are yet to execute. So I feel they are part of the organization, and regardless of this special order, they will still be paid their wages.
So as a result, the 400,000 is not relevant.
Yes,
Okay, then. All right. So the 400,000, examiner told you that In the recent management meeting, the sales manager suggested that 2 workers from the production department on a current wage of 400,000 naira can be transferred to execute the order. That 400,000 naira is relevant. Examiner was specific by saying current wage. There's difference between wages and salaries. Wages are those employees that are paid either on a daily or on a weekly basis. All right. So if you are transferring them, that doesn't mean that whether you like it or not, they are going to be paid. It doesn't work that way. It is like just like the footballers. Footballers are paid per week. All right. So they are not on footballers are not on salary. They are paid on the on the weekly wages. All right. Any wages, just like you say direct labor. All right. Just like you say direct labor. So had it been examiner as used salary on a current salary of 400, in that case would have said, oh, this is irrelevant, just ignore it. But this 400,000 is relevant. You have to take it. Yes, Christy, Zoom user, talk to me.
Sir, are you saying if they are still in their production department, is it not that it's
Pardon?
400,000 they will collect?
I didn't get that.
If they are still in their production department, because the sales manager said 2 workers from production
The
department.
issue now is that they are on a wage, they are on the wages. They are being paid wages, not salary. Understand the terminology. There's difference between wages and salaries.
This is English now. Voila.
So see, hold on, let me clarify. In production, you have some staff that are directly related to that are directly working to execute an order or to produce. Those are what you are going to classify under the direct labor. Those people that are directly involved, because those people that are paying wages or social workers, those are the ones that are directly involved in executing an order or in producing the product. So when you talk about wages means they are just like direct labor. So it's different from salary. So get the difference between the two. If examiner wants you to, they would have said, okay, on the current salary or on a monthly salary of this, they will tell you. But because the examiner has mentioned wages, you can't treat the same way you treat salary is not the same thing you are going to treat wages. All right. Okay. Yes, another person is raising hand. I also have Ogechi. I have Omotayo. Omotayo, yes.
Sir, from how you just answered that question, something just came to my mind. So does it mean that, based on the example you cited, with I think you cited an example with football. So does it mean that if the worker is not working because they are paid wages, so that worker will not collect anything for that month, for that week? If it's for a month that the worker did not work, he will not collect anything.
Hold on, I just used that one as an example. I also buttress that they are just like direct labor. Do you get? Direct labor are variable costs, of course, which is also relevant cost. It's different from salary. You are going to view.
Yes,
you are going to hold on, Tayo. You are going to view. You are going to view wages. You can see even in some of the questions we have solved in the past. At times, examiner can use direct labor or direct wages. No be so? Is that not what we did?
Yes.
So if you see that you call it direct wages or direct labor, these are direct costs now. It's relevant. Look at it in that perspective.
Okay, sir.
Yes, Ogechi. Ogechi, you raised hand.
Yeah, so I just want to clarify. With this now, it means anytime we see wages relating to let's say benefits given to any staff, we should just know instantly that
it's a direct
relevant
cost. It's
yeah,
direct
and a
cost.
relevant cost.
Yeah.
Okay.
So
And
like
secondly,
yeah, okay.
and secondly, this is carrying on a current wage of 400,000. What if it's carrying something like on a constant wage? What if it's no longer using current, it's not using constant, and they remove the salary and then still use wage? Should we treat it as a relevant cost?
there is nothing like a constant wage. Wage is wage, all right? That is what you earn. So like I mentioned, the basis is it's just an interpretation. It's just a terminology. You can either say direct labor or direct wages. It's the same thing. All this while that we have been doing our calculation under relevant cost and you are seeing direct labor, why didn't you question, oh, direct labor should be, it's not relevant because it's on a monthly thing. So anything that has to do with direct labor or direct wages, they are relevant now. That is the reason why we have to account for this 400,000 because it's a wages, all right? It's not salary. So when you see there's difference between wages and salary, once you are given wages, that means it's direct labor. If you are given salary, that one is fixed in nature. Salary is fixed in nature. Yes, Sunday Ago.
Yes. So I want to just ask. So can we say in every scenario where we see wages, we classify it as a relevant cost?
I just mentioned that.
Okay. And again, is there any other term that can be used to replace salary? That
Other terminology.
any other term, yeah, that can be used to replace salary that the examiner can use to maybe try the
Salary is salary. You see that examiner said it is salary, monthly salary or monthly compensation, whatever. But salary is very pronounced. If the examiner wants you to do something, of course, if they want you to, they will be specific. If it is going to be salary, examiner will tell you that it is salary. Because when you say compensation can come in any form. All right, it may be a settlement for something, but if the examiner wants you to, they will tell you that it is a salary. When you say remuneration is not necessarily, cannot necessarily be a salary. Okay? So, but the bottom line is that if it is salary, examiner will surely tell you that it is monthly salary so that we'll be able to know because employee on a monthly salary are fixed on a fixed cost. Okay, that salary paid to the employee on a monthly basis is fixed in nature. Irrespective of the decision taken, that one will never change because every month is what you earn the salary. But wage is different. Wage is just like when you say direct wages or direct labor, it's the same thing. Yes, Ogechi. Okay, you still raise hand.
Oh, apologies. I had not taken it down since then.
Okay, so I will then come here, labor. Labor costs. Let me go back to the question. So, skilled labor. Yes, that is for skilled labor. 400,000 naira. So put it there. It's relevant to be on the debit side. 400,000. Then move on. We're still on the same paragraph. You need to state all your assumptions. The production manager does not buy the idea because he believes that transferring two of the existing staff to execute the contracts will lower productivity. The management resolved that the staff should be transferred since the company is finding it difficult to recruit additional staff. However, if this happens, the management believes that sales will drop by 1.5 million naira at a marginal cost of 1 million naira. Okay, how do we treat that information? You are told that if the two staff are transferred to execute this order, then the management believes that it will affect productivity. And as a result, we are told that sales will drop by 1,500,000 at a marginal cost of 1 million. Yes, Pelumi, you raised hand.
Yeah, so what they're actually losing here is the contribution of 500,000, which is the sales of 1.5 million minus the marginal cost of 1 million. So the contribution loss of 500,000 is going to be a relevant cost.
Okay, thank you. Then Grace, you raise hand. Grace, talk to me.
Yes, sir. Palumi has said it all.
It's all right. Okay, then. So you guys are correct. So the only relevant cost is the contribution loss. You know the difference between sales and marginal. When you say marginal cost is the same thing as variable cost. So difference between sales and variable cost represent contribution. So since the company is losing it, then in that case, there will be contribution loss of 500,000. So I would then call me a contribution loss from 1.5 million to 1 million. There is a marginal cost of 1 million, sales of 1.5 million. So that's a contribution loss of 500,000. Let's move on from there. Production overheads. The fixed production overhead absorbed rates. The fixed production overhead absorbed relates to labor and would amount to 200,000. That 200,000 naira, is it relevant or irrelevant? Yes. The fixed production overhead of 200,000, relevant or irrelevant? If you know it, raise your hand. Yes. Grace, go ahead.
Sir. I just want to try. So
Okay.
I think it should be relevant because labor is a relevant cause.
Okay.
Yeah.
Thank you. Then Sandra.
Okay, so I think it's relevant now
Pardon?
because I think it's irrelevant.
Okay. Why?
It's fixed. They say it's fixed. Even irrespective of the fact that it relates to labor, it's still a fixed production overhead.
Okay. So Palumi, you also raise hand.
I think it is irrelevant.
Why?
Because it's a fixed cost. I mean, fixed costs is going to be incurred regardless of the contract or not. So I think it's an irrelevant cost. It's a fixed cost
Okay.
already.
All right. Thank you, Lord. Then you can drop your hand. Grace also. Then Sandra, mute yourself. Now, you are told that fixed production overhead absorbed relates to labor and will amount to 200,000. Irrespective of the decision taken on this contract, that fixed cost will be incurred. Therefore, it is not relevant. Even from the name itself, remember when I was explaining in one of our previous classes, I mentioned to you that there are two types of overhead, variable overhead and then the fixed overhead. Only the variable overhead is relevant. The fixed overhead is irrelevant. You ignore it, all right? Because irrespective of the decision taken, the fixed overhead will not change, all right? And then provided the fixed overhead will not change, it is irrelevant. So this 200,000, you ignore it. It's not part of our calculation. Next item, research and development staff. It has been concluded that when the work on this contract is completed, the research and development department will be shut down. The R&D staff costs for the year includes wages of 600,000 naira and redundancy. Okay, let's treat the wages first. R&D staff costs for the year includes wages of 600,000 naira. That 600,000 naira, is it relevant or irrelevant? Yes. Pelu, go ahead.
It is not relevant.
Why?
Because even right at the beginning of this question, you already mentioned that research and development costs are irrelevant costs. And then at the beginning of the question, we also understood that it has even been incurred before the contract started. And then, but there's a part I'm confused about. And because I don't know, I don't think they are short. The question is not making it clear if they are shutting down because of this project, or the department is just going to be shut down. Or is it because of this project? Or maybe when they're done with this project, there's not going to be useful life again for the department. Is that why they are shutting down? That's the only part I'm confused about. But based on my understanding, I think the wages for the research and development are not relevant.
Okay, so what you are saying is that the 600,000 naira is not relevant. Okay, so Sunday, Ago, go ahead.
So from my own understanding, I would say this is a relevant cost because it is
Okay.
stated that it has been concluded that when the work on this contract is completed, so it means it has not been completed yet. So when it is completed, the department will shut down. So to be considered as a relevant cost.
Okay. All right. So at this point, let me come. You can mute. Okay. Let me come in. You can even see that it's very glaring. Examiner call you wages. You are right, Pelumi. You are right that I said research and development is an example of sunk cost. But look at the scenario. Look at the scenario. You are told that R&D staff cost for the year includes wages of 600,000. This is wages. There are different kinds of costs can be incurred under research and development. All right. But the bottom line is that examiner told you in the question that it has been concluded that when the work on this contract is completed, this work is still ongoing. The research and development department will be shut down. So as soon as they complete this contract, they are going to shut down R&D department. But currently they've not shut it down. So you are now told that they are being paid. The staff, the R&D staff cost for the year include wages of 600,000 naira. For that word, wages, like I just mentioned to you under the labor cost that we did up there. So there is difference between wages and salary. So this 600,000 naira is relevant. You have to account for it. So I will come here, R&D staff costs. R&D staff costs. 600,000. Put it there. Yes, Sekinat. Go ahead.
Just to clarify, so does that mean that wherever we see a wage, it would always be a relevant cost?
I just mentioned it.
I mean, just to clarify, that's what I'm asking.
Okay. It is. Because wages is just like direct labor. All right. Then continue from that paragraph. And redundancy and severance pay of 150,000 naira now, or 350,000 naira in 1 year's time. There is a redundancy and severance payment of 150,000 naira now. If we shut down, what this simply means is that if you ask the workers to go, you are going to settle them. You are going to settle them with 150. If you ask the workers to go now, all right, there will be severance pay of 150,000 naira or 350,000 naira in 1 year's time. So how do we treat that information? Yes, let's reason together. There are some of you that have not contributed since, so you are just listening, paying attention. Others are racking their brains. All right. So others too should contribute. Talk to me. How do we treat that information? Omotayo Momo.
Yes, sir. To my understanding from that question, the redundancy fee, since that the part we already take the wages of the 600,000, the redundancy fee, that's as far as the R&D will be shut down. The redundancy fee is a cost on the organization. Already the one that has to do with that order has been taken into the contract already. So the redundancy fee, from my understanding, is irrelevant. So they will surely shut down. They will shut down after that work. And what is important to us, that work has been taken. So they will shut down. They will pay redundancy fee when they shut down, whether in 1 year time or in that. So they already take the important one. That is what I understand by that question, sir.
All right. So that's noted. Thank you, Tayo. Then Sakinat.
Okay. So I think the redundancy and severance pay that would be relevant is the 350,000 naira because they will be closed in 1 year's time, and that's when the contract will be completed anyways. So that's when the severance pay, because severance pay is as a result of maybe disengaging employees. So I think it's at that point when the severance pay or the redundancy pay would be incurred, and then that's when it will be relevant. So the 350,000 naira, I think, should be the relevant cost.
Okay. Pelumi, thank you, Sakina. Yes, Pelumi.
Okay, so what I think is going to be relevant is going to be the difference between what they would have paid now and 1 year after when the contract ended. So I think that they're going to shut down the place, but they're not shutting it down yet because of this contract. And if they're shutting it down now, they would have paid 150,000, right? But because of the contract now, they have to wait an extra year to pay, which increased the cost to 350. So it's that 200,000 naira extra that I think is relevant. Thank you.
Thank you, Pelumi. I don't need to buttress on that point again. You've already made it clear, and I believe it's clearer to everyone as well. So what Pelumi is saying, let me just add to it, is that, of course, if you want to shut down this department now, the severance pay is 150,000 naira that will be paid now. But if you delay it for the next 1 year, the company will pay 350. Can you shut it down now? No, this department cannot be shut down now because they want to execute this contract. As a result, the severance pay has increased from 150 to 350. Therefore, what is the severance? What's the relevant cost on the severance pay? In this situation, it is different between 350 and 150, which is 200,000. So that's what you are going to consider. So I will then come here, redundancy, and severance. The difference between 350 and then 150. Okay, that's 200,000. Ogechi, talk to me.
So just a
Ogechi,
question. What was the meaning of this redundancy and severance?
redundancy, if you shut down a department, so of course, that means the employee that are already working in that department, they are going to become redundant. They won't have anything to do again. So the payment that will come as a result of that is what is it is severance. All right. So yeah, it's just a compensation to the affected workers or staff in that department. Okay. All
Okay,
right.
sir.
Let's move to the next one. The next one is equipment. Remember, like I said, at all time, after the calculation, you have to develop your assumptions or your underlying assumption, the basis of your calculation. You can't just end your math without doing all of that. In fact, in this particular question, the assumption carries more mark. Move on, equipment. The contract utilizes a special equipment which cost 180,000 naira 3 years ago. That 180,000 naira, of course, is it relevant or irrelevant? Here, 180,000 naira, relevant or irrelevant? Who will help us? Yes, Pelumi, go ahead.
It is not relevant because it's a sunk cost or historical cost.
Okay, this is sunk cost, so we ignore it. Let's move on. It has a residual value of 30,000 naira in another 2 years and a current disposal value of 80,000 naira. If the equipment is used in the contract, it is estimated that the disposal value in a year's time will be 60,000. We are given 30,000, 80,000, and then 60,000. How do we treat this? How do we treat the information given? How do we treat those figures? Yes. The machine this equipment has a residual value of 30,000 naira in another 2 years. In 2 years' time, the residual value of this equipment will be 30,000 naira. However, the current disposal value, whether you call it residual value, disposal value, scrap value, trading value, next realizable value, is the same thing. All right. So the current disposal value, if the company wants to sell this machine now, they are going to earn 80,000 naira. However, if the equipment is used in the contract, it is estimated that the disposal value in a year's time, this contract will last for the next 1 year. So in a year's time, the disposal value will be 60,000. Yes, who was the first person to raise hand? Let me check. Grace, talk to me, Grace.
Okay, yes, sir. So I think the only relevant cost is them using the machine and selling it at 60,000 naira. So the relevant cost is around 20,000 naira. The difference between 80,000 naira and 60,000 naira. That's
Okay,
the current.
Thank you, Grace. Yes. Sakina, you raise hand. Okay, you have dropped it. Amotayo, Wumi. Yes, Wumi.
So sir, what I see in this question is we are going to the relevant value we are going to use for the disposal is 60,000, and then the
Okay.
difference between the current disposal value and then the disposal value after a year, which will be 20,000 naira, it will be lost on the what's it called, on the company current, is it current side, on the credit side of the company, yes, 20,000 naira should be a loss at the current side of the company's accounts, if I'm right or wrong.
So what you are saying now is that the 60,000 naira is correct. That's a disposal value, Abi.
Yes, sir.
Then the difference between 80 and 60 again, that would be what?
That would be a loss.
Okay, so if it's a loss, that would be on the debit side
On the
also.
debit side, yes, sir.
So what you are saying is that technically there will be a 40,000 naira gain on disposal of the equipment. Okay. Yeah.
There should actually be a 20,000 naira gain if they are not waiting. If they are not waiting for another year to dispose the.
But they are waiting now, isn't it?
Yes,
because
they
the
are
period
waiting. So the period they are waiting for is the 20,000, sir.
So what's your final answer now?
So we are going to have the actual disposal value of 60,000, and then 40,000, and then the debit 20,000.
Okay, no worries. Yes. Tayo Mama, you also raised hand.
Yes, sir. The disposal, the difference between the current disposal value and the disposal after the contract, that is 20,000. That one will take it as part as one of the relevant costs because it's reduce our chances of saving. Have a cost saving of 20,000. So we are going to take that difference of 20,000 as the disposal loss as is relevant. That's what I want to say.
It's all right. So you can put down your hand. Yes, one of you has already answered the question correctly. Of course, the 30,000 naira, the residual value of 30,000 naira that will be earned in the next 2 years, that one is irrelevant because the period of this contract is in 1 year's time. So the 2 years, 30,000 naira is out of it. We're now told that a current disposal value of this machine, of this equipment, is 80,000 naira. If they want to dispose of this equipment now, the company will earn 80,000 naira. If the equipment is used in the contract, it is estimated that the disposal value in a year's time will be 60,000 naira. Today, the value of the machine is 80,000. If they want to sell it, it's 80,000. But because they are going to use it for the contract, they are going to delay the disposal till the next 1 year, where the disposal value will be 60,000. So technically, how much has the contract utilized in this equipment? Is the loss in value from 80,000 to 60,000, which is 20,000 naira. That means only 20,000 naira will be considered as part of the cost of this project. So I will come here. Equipment. Loss in value. Loss in value. Disposal value of 80,000. Currently, if they want to dispose it, it's at 80,000. But because they are not going to dispose it now, they are going to wait for the next 1 year when it will be disposed of for 60,000. That means the company has lost 20,000 naira because they delayed it for the next 1 year. So that extra, that loss of 20,000 should be part of this contract cost. So that is for that. Let's move on to the next one. Share of general building services. The contract is charged with 350,000 naira per annum to cover general building expenses. The building space is currently being used for the contracts. However, a neighboring business has approached Scudetto Limited to lease the space for 1 year at a consideration of 70,000 naira. This 350,000 naira, is it relevant or irrelevant? Talk to me. Yes. Yes. Zoom user. Christy, talk to me.
Yes, sir.
Zoom user. Christy. Okay, great. Go ahead.
I'm still digesting it.
Oh, okay.
In fact, I'm even still on the equipment self.
Grace, talk to me. You raise hand.
Okay, sir. So they say the contract is charged with 350,000 per annum. So it's like this cost is allocated specially for the contract for the building expenses. So I think it should be relevant.
Should be relevant or irrelevant?
Relevant.
Okay, I didn't get that. Is it re or irre?
Relevant.
Relevant. Oh, okay. So what you are saying now is that this 350,000 naira is part of it should be part of the contract cost. All right?
Yes, sir. Because they say it's charged, yes. The contract
Oh,
is charged with 350 per annum to cover the
okay.
building expenses.
All right. Omotayo Momo.
Yes, sir. They said the contract is charged with 3 per annum to cover general building, so it's irrelevant, sir.
Why?
Oh, no.
Is a fixed cost. It's covered the general building of all what the company is involved in. So is a periodic cost. It's irrelevant.
Okay.
Mm.
All right. So who again? I think that's enough. You can put down your hand. Now, this 350,000 naira, like you rightly said, even Grace, you mentioned it, that it's a general building expenses. It is not related to the contracts now. Any cost that we incur purposely because of that cost of action, we said is relevant. This 350 does not relate to the contracts. This is merely an apportionment. So when you incur costs, then you now distribute it for everybody in a building. So that cost is a general cost. It's not related to, it's not specific to any department or whatever that is within the building. So this particular cost does not relate to the contracts. Therefore, the 350,000 naira is irrelevant. You ignore it. However, you are told further that the building space is currently being used for the contract. Okay, the building space is currently being used by the contract. However, a neighboring business has approached Scudetto Limited to lease the space for 1 year at a consideration of 70,000. That 70,000 naira, is it relevant or irrelevant? Yes, Pelumi.
it is relevant
Why?
because without the contract, they would have earned 70,000 naira on it. They would have listed to the foreign person and earned 70,000 naira. But due to this contract
Okay.
now, it's like an alternative forgone. Maybe opportunity forgone. So they are forgoing the opportunity of 70,000 naira because of the contract. So the contract will bear the cost of the 70,000 naira that they are forgoing. So it is a relevant cost.
All right, you are correct. You are correct. The 70,000 naira represents an opportunity cost because examiner told you that a neighboring business has approached Scudetto Limited to lease the space for 1 year at that amount of 70,000. That building space is being used currently for the contracts, but the company cannot earn the 70,000 because of this contract. Therefore, it's a benefit forgone. That is what is called opportunity cost. So you then put it down. Opportunity cost, share of building, share of building services, opportunity cost, 70,000. Okay, I think that's all. We have considered all costs, all information we have in the question. So at this point, the next thing we need to do is to determine the total cost or profit, whether it should be accepted or rejected. So give it to me. Add up everything together. What do you have there?
1.790.
1.790. Okay. 1,790,000. This 1,790,000 is a cost. All right. I forgot to add up the 350 and then sorry, the 3 million and the 350. I'm supposed to add them together to be 3,050,000. But in any case, give it to me. 1,790,000 minus 30,50,000. What's the hiatus? What's the difference? 3,050,000 minus 1,790,000.
1,260,000.
1,260,000. So this is a profit on less cost from your cash inflow. Cash outflow minus cash inflow represents a profit. All right. So examiner is now asking you to advise the CEO of Scudetto Limited if the contract should be accepted. State any assumption made in your calculation. Okay. So I would then say Scudetto Limited should accept the contract since it will generate a profit of or additional profit of 1,260,000 naira to the company. So that's that. Then assumption, you then come here. The calculation above is based on the following assumption. I'm not going, because of time, I'm not going to be listing all those assumptions, but let me show you. I think let me use the ebook to explain the assumptions because of time. So before I switch, let me know if you have any question for me on this. So you need to state your assumption. Let me stop sharing this. And like I said, you need to, of course, the assumption is not something that you are going to fabricate. It's something that is already in the question. Examiner is only asking you to state the basis of your calculation. How have you arrived at your numbers? That's what the examiner is saying, that you should state your assumption. The first assumption starts from if you go back to the question, the first assumption is on the research and development cost, okay, of 400,000. So the cost of R&D and the market surveil of 400,000 and the 250,000 respectively are sunk cost and therefore not relevant to the calculation. That's our assumption on the first one. The second one is on material Zinco. That material Zinco of 600,000 naira, we are told that was bought 2 years ago. Again, that's a past cost, that's a sunk cost, and therefore not relevant. However, the only relevant cash flow associated with the contract is a saving of 50,000 naira arising from the disposal of the toxic material. So that's why we are seeing that 50,000 they will add it to the contract price. This 50,000 we added to the contract price. Okay. Now, number 3, labor cost. The current wage bill of 400,000 naira for the 2 production department staff is relevant because the worker will work on the contract and must be paid. In addition, the contribution loss of 500,000 naira, which the company will suffer for diverting labor, is also relevant. So that's my assumption as far as labor cost is concerned. All right. Okay, then number 4, production overheads. This will be incurred irrespective of the decision taken on the contract. Therefore, the fixed production overhead of 200,000 naira is irrelevant. So we ignored it. That's our assumption in the calculation. Under the research and development staff costs, the staff wages of 600,000 naira is relevant. The cost will be saved if the contract did not go ahead. All right. The redundancy and severance paid of 350,000 and 150,000 naira are irrelevant. Only the incremental cost of 200,000, okay, the difference between 350 and 150 is relevant. So that's the assumption we made under R&D staff cost. Then number 6, equipment. The original cost of the equipment of 180,000 naira 3 years ago is a sunk cost and therefore not relevant to the calculation. The only relevant cost associated with the equipment is the loss in value of 20,000 naira, representing the difference between the current disposal value and then disposal value after a year, all right, of 60,000. Then finally, the share of general building services. The building overhead charges of 350,000 naira per annum is irrelevant because it's an apportionment. However, an opportunity cost of 70,000 naira for lease renter is attributable to the contract. Okay, so that is that. That is the end of the question. That's our assumption. It is only when you do this that you are going to earn your full mark. Yes, Christy.
Sir, please, can you share us this one on the group chat, the assumption?
The assumption. This one is on the ebook now. It's on the ebook. If you have access to the ebook, so just go there and pick it. All right.
That one where they say 70,000.
70,000.
That's 7,000 naira.
If I say you should buy 70,000, will you buy?
7,000, Abby.
Boy market.
Sir, please
Yes.
everyone have screenshot and send us now. Thank
Okay,
you.
I've heard you.
Thank
All
you,
right.
sir.
Adesua, are you in this class?
Yes.
No, you are not in my class. Why are you so quiet since? Adesua, I did not hear your voice today. What happened? All of you, majority of you refuse to contribute. Only the few people that have contributed since the beginning are the ones still talking. Eh? Who is P1 Blossom? Who is Blossom? Blossom did not contribute. Tony did not contribute. Kelechi did not contribute. God's Pampami. Who's God's Pampami? Femi, he did not contribute. Faith, he did not contribute.
Sir, I contributed though.
Femi, who is that?
Sorry for not raising my hand, sir. It's Femi.
Oh,
I gave
Femi.
the.
Okay. Adesua of all people. Wow. No worries. It's okay, guys. So that's it for today. Let me know if you have any question for me before we conclude in today's class. Any questions so far? So in the absence of additional question, this is where we are going to call it a day. In our next class, we are going to be having a brand new topic, which is optimal product mix. So I want to encourage you, go to your material, go and read about optimal product mix in details. All right, go and read about optimal product mix. It's very interesting. Yes, Christy, talk to me. Christy, you raise your hand. Okay. All right then. So thank you guys. I will see you next time by the grace of God. Bye-bye.
We're not doing this
Yes.
one.
Time is already over now.
Okay.
So yes, Tayo, you are talking about the assignment. I will share with you. I will share the assignment now so that you can the assignment must be submitted not later than today is Saturday, not later than 11:59 on Wednesday. All right. If you submit 12 a.m., I will just acknowledge your assignment. I won't work on it. So you have to submit not later than 11:59 on Wednesday. Thank you guys. Bye-bye.
Thank you, sir.
Thank
You're welcome.